Hi, I'm Graham, the Insights Manager at finder.com.au. Now, the RBA didn't cut cash rates today. It looked dicey leading up to the decision that maybe they would, but in the end they didn't. So we're waiting to see what the effects of the last two rate cuts are. The RBA seems to think the economy is okay for now. Here we're going to talk about 4 things to keep an eye on in the Australian housing market for August 2019. So what's happened to interest rates for home loans? Well, as you know, the RBA cut by 50 basis points, but the average cut of the variable rates across the big 4 banks is only 43. So they kept a little bit back for themselves. But having said that, those are the big variable rates. There is good value to be had in the market. Aside from that, we've seen rates as low as 2.75% for some lenders, and all of these lenders on the screen here have sub 3% loans available right now. So there is value to be had for those who are willing to shop around. Bear one thing in mind though, that rates can continue to go down if you get a fixed rate. Now, 60% of economists surveyed by Finder were expecting another rate cut when we asked them last week, though the RBA's statement after today's whole decision makes it look like maybe we might not see another cut. So, you know, it's definitely worth watching that space and bearing that in mind before you lock in a fixed rate. So what's happening to house prices? Well, last month we saw 3 cities experience positive growth for the first time in quite a while. And this month we've seen 5 do the same. So Sydney, Melbourne, Brisbane, Darwin and Hobart, who all experienced positive growth. The numbers are there on the screen. However, it's worth noting that prices declined in all other cities. So prices fell in Perth, Adelaide and Canberra, meaning the average growth across Australia is only 0.1%. We asked our economists what they expect house prices to do over the next 12 months in the Australian capitals. And when we look at the growth figures, Canberra topped the list at 2.27%, followed by Hobart at 2.19% and Brisbane at 1.81%. These are moderate growth figures, but it does show that on average across the economists' opinions, some growth is expected. So what's happening at auctions? Well, I went to my first house viewing in quite a while this weekend in Sydney for a small 2-bedroom home, and there was nearly 100 people there. There was queues down the street. It definitely felt like something had changed in the market, but if we really want to know if that's the case, we need to look at the auction clearance rates. Now, these are the percentages of homes on the market that are actually selling, and they've been relatively positive recently, though as you'll see from the numbers on the screen, they've slacked back a little bit in Sydney and they've kind of stagnated in Melbourne. So they were looking a little bit better, but now we're not really quite sure what's happening there. So is this the recovery, or are things looking pretty gloomy? Well, there's a lot of people talking about a dead cat bounce in the media. Now, a dead cat bounce is the last gasp for breath of a dying asset when an economy generally is going down the tube. So we don't want that to be the case, but if we want to know whether we're looking at a genuine recovery or a dead cat bounce, we need to look at figures a little bit deeper. Now, going back to those auction clearance rates, while the numbers look relatively okay, we need to also look at the volume of houses for sale on the market. Those percentages are coming from 320 auctions in Sydney across the last weekend and 450 in Melbourne. The thing is, if you look at the same figures from February this year, there was around 700 auctions in Sydney and around 1,000 auctions in Melbourne. So there's a lot of reduced stock on the market. But one of the reasons these clearance rates look pretty high is that there's quite low volumes of property on the market. Separate data from CoreLogic shows a 20% decline in the number of new properties on the market year on year, but a hold in the overall number of properties. Now, what that means is properties are staying on the market for longer, which means potential sellers are not getting the prices that they want quickly. So these high numbers could just be an artificially inflated reflection of the low volume of stock on the market. So it might not be the true actual value of homes. We really need to see those volume numbers go up as well as the house prices go up to make a proper determination as to where we're going. However, lenders at the same time are reporting increased number of inquiries, and our website has seen increased traffic to the home loans inquiry pages. So there definitely appears to be more interest in the market out there, but we have to wait and see whether that peters into more buying action. So are the economists we have surveyed being over optimistic? Are we heading for a recovery, or are we in the middle of a continuing downturn? Let us know what you think in the comments below. In the meantime, keep an eye on finder.com.au for continuing news coverage of the economy in Australia.